Well, hello there, Maverick Currency traders. This is Rob Reinhold. It is May 12th. Let's jump into it. In this session, we're going to go through the news of the day. We're going to take a look at the commodity markets. Big news over the weekend with a huge gap higher. It affected all of the asset classes. So we'll be going in and looking in what is moving at the moment.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Big news over the weekend. We got the announcement that US and China have agreed to some terms. Now look, this is just a delay. Pretty much, I don't want to say all the tariffs. There's still substantial tariffs, but they took the biggest chunk off of them. I think there's still 50% tariffs, but they removed like 110% of the tariffs. And they came to some agreements about China opening up their market more. The market loved this. And we had a huge gap higher over the weekend. Over the years, and I've talked to many traders about their trading strategies, I always talk about weekend gap risk. And it's one of the reasons why in my own personal Forex trading, I only hold risk off positions over the weekend. If it's a risk on position, I don't hold it. I either take it all off and then put it back on Monday or at least reduce it by half. I do not hold full positions over the weekend if it's a long position. Why? Because of all of the years I've been doing this, or close to 30 years, we've had tons of gap downs, but not too many gap ups. This one was one of the biggest, and I actually went on to ChatGPT and I asked, hey, how many gap higher have there been over 2% in the last 30 years? And there was like 6 on a Monday. The last one, which was the biggest one, was during COVID. We actually had a 6% gap over the weekend, but this one was a big gap. It was about 3.5%. So huge change in everything here. And we saw the dollar strengthen, we saw the CAD strengthen, and we saw the yen weaken. Now, Ankit pointed out over the weekend in the currency room that dollar yen was likely going to be the best pair. It was the best pair, but the move was very quick. If you weren't watching it, you missed it for sure. Let's not take a look at dollar yen. Let's look at what happened outside. CAD strengthened with the dollar. We've seen that they are correlated at the moment, but Aussie was the strongest currency outside of that. We were looking at Aussie and the pound to be the strongest currencies for this week on the long side, and you can see they held in okay, but they didn't do great. The losers, Euro and Swiss franc, they have been the strongest in the fall in the markets, so they're just giving it back. We go over, take a look at the equities. 3.2% is what the S&P did. Cryptos, after a monster 2 weeks, they're just taking a break. This is not indicative of anything. We'll take a look at the chart. Gold pulling back. I've been talking about gold for the last 2 weeks, saying all the reasons why gold made a huge run, like a 25% run, which is enormous for gold. They're pretty much coming off the table. So I think gold likely heads a little bit lower here. As far as cryptos go, these aren't scary numbers here. Bitcoin, Ethereum down 1.5%. That's nothing in crypto. We see Litecoin playing a bit of catch up. It had been the laggard in the last 2 weeks. Probably playing a bit of catch up as people are looking to allocate some money to crypto and don't want to be chasing the ones that have already run too much. Over the weekend, I talked about how I was at a 1.5, and I said, I just want to get further away from this 50-day moving average to go to a 2. We are definitely there, so we are at a +2, which means that we are looking at a risk-on outlook in our currency trades, so we are looking to be strong, those risk-on currencies. I talked over the weekend in the currency room about how we had made this nice bottom off that VIX that spiked above 40. I called that a durable bottom a couple days after it happened. And then we came up and we based here 7 days above the 50-day moving average, telling you that, hey, it did not want to go down. We had no idea that the news was coming out. The market didn't, but the market was showing you that people were buying in anticipation of it. At this point, this is a nice gap. Now, don't you dare start thinking, oh, it was up 3.5%. There's got to be a pullback. guess what? Look at today's price action. For those of you that are fairly new in the business, this is a huge, huge story telling you that this market wants to go higher. What happened was we had this big gap up, tiny bit of selling, but every little sell-off was bought. I mean, this is the only one here. This is 20 minutes of a sell-off, and it got bought up. And then take a look. Everything got bought. Any little pullback, bought. What was happening is that when you are an institutional trader, which means that you are filling orders for big institutions. So a hedge fund or a mutual fund says, hey, we want to buy 20,000 shares, 2 million shares of NVIDIA over the next 3 days. You have that order across your desk. You don't just hit buy at market. You have to be working that order. So what you do is whenever there's big chunks on the ask for sale, you go and buy those. And then you sit on the bid showing 100 shares. So any order that's coming in to sell, you're just scooping them up. You're just scooping them up and scooping them up. And then what happens is throughout the day, it goes higher. Any selling, you're just scooping up. You're just scooping up anything. And I call this the bid is thick. The bid is a mile thick, meaning that's why it can't drop, because they're showing 100 shares, but there's really 100,000 shares being bought behind it. And then what happens, and this is the telltale sign, at the end of the day, all the traders that didn't get their orders filled, they now have to become aggressive and chase the market price. And so you get this explosion at the end because these traders know that they have tons of orders they got to fill tomorrow. They can't be messing around with these today. They got to get these closed out because tomorrow there's another 2 million shares, 10 million shares that they need to fill. This kind of price action is screaming that the institutions are buying, and they aren't just buying in a day. They're going to be buying over weeks. Very, very bullish. As you can tell, I think this market is likely to go higher. With that being said, I don't think we can make new highs until the tariffs are completely settled. We are about 7 or 8% away from all-time highs. I think we can get close to that, maybe up another 3, 4, 5%. But I would be very surprised if the market makes new all-time highs before the tariffs are completely settled. Let's take a look at the calendar. We have not had anything on there until tomorrow's CPI. Tomorrow's CPI in the US, that's going to be something at 9:30. And we've got Australian Wage Price Index. This CPI probably isn't that big of a deal anymore. Everyone knows that the market has changed dramatically from the weekend when we had 160% tariffs with China, and now we have 50% tariffs. It's a totally different world, so all the numbers before that are going to be ignored. Let's take a look at the markets right now and see what's moving. All right, we are looking for velocity. So again, what I'm looking for is a steep 13 EMA. I'm looking for steep RSI, things like that. So let's just start off the top at the yen. Yen is absolutely moving. Look at this big, steep downtrend. It's basing here. That's great. We love bases. We love bases. The weakest things, they base. Here's a bear rally, fall. We're now basing. Look, let this thing base. I'm going to be there when it falls out. I've liked yen short last week and this week. Dollar? Hey, dollar looks like it's got momentum to the upside. But dollar yen still looks like a tradable pair, but it's basing as well. So we're cooling off here. We'll take a look at that pair for sure to see where the next entry is going to be. Swiss franc is also moving. So we've got some momentum here on the Swiss franc. We got 13 EMA falling hard. We had this little rally that really petered out very quickly here. Swiss franc is also on the board for a potential short. Euro, hey, euro's moving as well. Not as steep as the others, but look, still steep enough. We've broken through some support here. So for me, euro is tradable. Pound keeps cranking on the upside. Look, it's not a great trade. I mean, when you take a look at these moves, they're not very big, but it is definitely moving higher. You can look to be long pound as well. CAD got a ton of momentum to the upside, like this one quite a bit. Running into some resistance up here, but we'll take a look at some CAD crosses. Aussie, Now this is where I wanted to be. I wanted to be long Aussie. And I look at this and I say, I'm in the wrong spot. I'm in the wrong spot. Where is the strength? Is the strength in the Kiwi? It's not in the Kiwi. So I really have to look at CAD, pound, and dollar for my three currencies that are looking like they're running to the upside at the moment. All the cryptos are resting right now. So as you can see, we've got three currencies long and we got three currencies short. There's some decent opportunities here. Let's go take a look. First, I want to take a look at dollar yen. Dollar yen is definitely the most powerful move with the most energy. The question is, does it have anything left over the next 24 hours? And that is the real question, is that we've clearly identified that dollar and yen was the biggest mover today. Does it still have momentum to be the biggest mover tomorrow? The dollar chart says we're running into some resistance here. The 4-hour charts, we just had this big move higher. I will trade this if I get a pullback or a base. Pullback or a base, but I'm going to need probably another 4 or 5 candles. So that's another 24 hours. It's not in my horizon for what I'm looking at over the next 24 hours. Let's then go to stuff like euro. Let's take a look at something like pound euro. Pound euro is a pairing that I like the pound long, I like the euro short. You can see we based here and we just had a little expansion here. Is it running into anywhere that I'd worry about? I like this up to 120. I like it up to 120. There could be some resistance right in here. I would love to see just a little pullback, buy that little pullback or a base. I like it in this area. I'm not saying I like it right here, right now. As you can see, we just had this move off of this base. Typically what we see is we either get pullbacks or we get bases. Let's see what we get. I like this one in this 118.50 to 119 area because I think 120 is the next level it's going to. But the question is euro the best short or is Swiss franc the best short? And we can see that the euro, I just paired up the euro Swiss franc, the euro's rising against the Swiss franc. So that tells us that the Swiss franc is the better trade. So let's take a look at pound Swiss franc. And you can see we've seen the same thing, a breakout of a base. Let's just let this thing cool off a bit. Let's just let it have a pullback, probably during the Asian session. I like this thing. Let's just let it pull back. And then when it breaks higher, I think that's the entry on this one. Where is the next resistance area on this? Boy, there's not one even in sight. 114, that's a big move. That's about a 2.5% move. I'm not saying it's going to get there immediately, but there is not any resistance between those two areas. The last one I want to take a look at is CAD against Swiss franc. CAD was another strong performer here. As you can see, we've got same thing here. We broke out of a base. We broke out of a level. Now we are reaching, some exhaustion. Same thing here. All of these pairings look really good, not during the Asian session, but later in the European or the US session. Wrapping this up, we are in a bullish market, period. The cryptos are resting. They're going to take off again, most likely. But right now, I think you play yen, Swiss franc, and euro to the downside. There's nothing I love to the upside. Dollar, CAD, they look okay. Pound looks okay. But I'm telling you what, I really like yen, Swiss franc, and euro to the downside here. Happy trading, everyone.